Alrighty, so welcome to today's call. This call is going to be going over discretion. Um, and so this is like probably the question I get asked the most, like, Patty, how do you build discretion? How do you build discretion? How do you build discretion? Whatever, blah, blah, blah. And I've covered it many times before, but for now I'm going to start off with just, I guess, the psychological aspect of discretion, what that means, and when you actually get to the point where you develop discretion. So for now, just honestly listen to what I'm saying because it's really important. But yeah, so I've said before, discretion isn't something that can be taught, and it's true. You can't really teach someone how to build discretion because then it goes against what discretion is, right? And I think discretion, well, I don't think, I know it is. Discretion is completely subjective. Everyone is going to have their own discretion. Everyone's going to have certain times in the markets where they feel more inclined, or I guess intuitively more confident in a trade than someone else would, despite if they both are trading the same model because they like certain market conditions, right? And so what I'm trying to say here is you can't force discretion. And I really want you to pay attention to what I'm saying here. If you are asking yourself, "Oh, am I being discretionary here, or how can I be discretionary here?" then you're probably not even in a position where you actually are being discretionary. You're trying to cope being overconfident. And so I'll see a lot of beginners say like, "Hey Patty, I was trying to be discretionary here," or people who like don't have the model fully mastered and they're like, "Oh yeah, but my entry was discretionary here," and I'm like, "No, that wasn't discretionary. Like that, you fully broke your rules. You broke the rules completely." And there's certain rules that I will say are mandatory that you can't break. And I put a lot of thought into this, and it's very simple actually. But if you're doing any of this, then you are not being discretionary. You're being overconfident. You're being greedy, and you're breaking your rules. So, first thing is, if you are taking a trade inside a 5-minute gap, so if you are taking a trade, and I see this is like the time that I see it fail the most for people, they think that like they can just execute at any time. And there's times where you can, I guess, be more discretionary or not take the highest time frame setup. And what I've realized that to be the most common theme is with like 930 Judas. Because when 930 immediately opens up and then you get that inverse of the 930 candle, that momentum and that volatility is so fast and it's so strong that almost never, or at least never, have I actually seen the highest time frame gap get inversed. And so if I guess I were to teach you any sort of discretion or something you can maybe start building on your own and you can backtest, is look at the 930 openings almost every day and the days that there are inversion setups going out of them. And notice how it's usually just one strong 1-minute displacement candle as a confirmation that's inversing, and it's almost never the highest time frame inverse. Right? So that's like a scenario where if for some reason there was like a 5-minute there, I mean, listen, if you just traded into an unfilled 5-minute gap, if you just traded into it and you are still executing, you are asking to be stopped out. So this rule is for sure one of those that cannot be broken, right? Or we can put 5/15-minute gap. This isn't discretion. This is just pure stupidness, all right? Can you give an example of that? Yeah, so let's say, I can draw it on, then I can look for a real example. But this is what I mean, right? I will see people, let's say we hit a higher time frame imbalance, hit a 1-hour bullish fair value gap, and now we're looking to take an inverse, and someone takes, let's say like a 2-minute inverse here, but price just traded into this 5-minute, right? That isn't discretion. That's just being a fucking idiot. Because the whole model, everything that we trade, it's truly built off of the concept of 5 and 15-minute fair value gaps. They're the strongest indicator of the next round liquidity. If you've watched a conditions video, you know they serve as our conditions, and they're the most transactional of them all. In order to align the highest time frame with the lowest time frame, with the lower time frame, right, with bias and execution, you need something in the middle, and that has always been 5 and 15-minute fair value gaps. And so then you grab the MEC model, for example. The whole concept of the MEC model is built around unfilled 5-minute gaps, right? So the MEC model, the concept of unfilled 5-minute gaps and 15-minute gaps is very powerful, because we know that the market likes to trade back to them almost any time that there's an opportunity. So if this inverse happened down here, and there was no other highest time frame inverse here, and we had this unfilled 5-minute above, we know that there's an incredibly high chance of price hitting this 5-minute. Now, once price hits this 5-minute, we have no idea what can happen. We don't know if we're going to go down, if we don't know if we're going to go up, because this isn't a matter of bias. This inversion we caught is just riding momentum and catching a quick flip and order flow towards a mechanical imbalance, which we know to be the unfilled 5 and 15-minute, and it happens the majority of the time. But once we've hit and traded inside that unfilled 5 and 15-minute, there's really no knowing where price is going to go next. And that's when what originally was a target now turns into a condition. Okay, well, now we're inside this 5-minute. So if we end up respecting this 5-minute gap and we get an inversion lower, highest time from an inverse, then we can expect price to go lower. And that's if we feel confident in shorts. If we don't feel confident in shorts and the inverse happens off the 5-minute, then we just watch it play out, right? We just watch it play out. And so a thought process like that would look like, okay, let's say I didn't catch my longs here because I thought it was too early. Fine. And then price trade into the 5-minute. Okay. Price is respecting the 5-minute, and we're getting the highest time from inverse to the downside now. But I don't really feel confident in shorts. So what do I do in a scenario like this? Well, I sit out on shorts. And so if price now decides that it wants to go lower, am I going to be pissed that I missed out on shorts? No, I'm going to be happy that now we might get a really good long setup, because now what's happening? We're resweeping this lower trend to the higher time frame imbalance, whatever. And now if we get a reaction off of here, now we can target this intermediate high inside the 5-minute and take longs to there, right? And so this is like how the whole thought process flips. So I really want you guys to understand what I was going there with, if you kind of, okay, so it's what I'm trying to say here. This is a bit off the topic of discretion, and this is more reactionary, but this is the confidence that you will build as you trade more and more the model. And so this is like trusting scenarios, creating scenarios, building ideas off what gives you the highest conviction and confidence. And so, right, what started off as, a long idea, pretty much. Let's say we wanted a long here, but then we didn't get an entry because price, and let's give ourselves more space. There's a 5-minute here. There's a 5-minute gap here. We wanted to take longs, but the candle inversed at the same time as hitting the 5-minute. And so now we tell ourselves, fuck. Well, we wanted to catch longs towards the 5-minute, but now that got fucked because we hit the 5-minute. And so because conditions tells us that, we're supposed to analyze these 5 and 15-minute gaps and see where the inverse, how we inverse or how we trade out of it, then that's how we know what direction price will keep trading. And so let's say we respect the 5-minute and then get an inverse to the downside, highest time frame inverse, right? And so now what we're looking at is potential shorts. But yeah, although I guess mechanically, conditionally, everything, it makes sense to be taking shorts, but maybe you say, well, I don't really feel a lot of conviction for shorts, so I'm going to sit this one out. And so a lot of people would call this missing a trade, when realistically, you're not missing a trade, you're just waiting for the more ideal scenario. And I'm not going to say more A+, because listen, all these mentors and all these people online, they want you to be like them so bad, bro. They want you to be like direct clones of them. They want you to think the way they think. I'm not fucking stupid, all right? You guys aren't going to think the same way I do. You guys aren't going to think the same way Blake does. I'm not going to think the same way Blake does. You guys are going to master our models, and then you're going to make them your own, right? So I don't care for you to like trade the exact same way that I do. I don't care for you to take the same trades as I do. I tell you guys all the time, if you followed your rules and you took a trade and you liked it, it doesn't matter if it's a win or loss. That's a W in my book. That's a W in your book. That's all that fucking matters. We don't have to take the same trades, but you should be using the same ideology. You should be using the same thought process in a way to build out your trades. As long as you're building narratives using the ideas that Blake and I have given you, that's all that matters, right? And there's certain rules that shouldn't be broken, like I mentioned before, and we'll go back to the discretion aspect of it, like trading inside a 5 minute. Like if price just hits an unfilled 5 minute, then you shouldn't be executing, right? An example like right here. And it's stuff like that where it's like if you're getting that, if you're changing up stuff like that, then you're really just not even trading the way Blake and I do at all. Like that's just, I don't know, that's not really something among our strategy. But what people don't understand, and it's like I've seen it in my YouTube videos too much, where I do exactly what I do every single day going to the trading session. You know, I look for systematically, mechanically, MEC and PDI. I look foundationally for all those concepts. Are we bouncing off a higher time frame gap? Are we getting a highest time frame inverse? Do we have all this? Whatever, blah, blah, blah. And, you know, as I've gotten to become a better trader pretty much, and I've spent more time executing my model, I've realized that a lot of people are so focused on like the aesthetics of a trade and not the actual facts that are happening. Some people will see a strong displacing candle through an inverse and tell themselves, that's a bad close, so I'm not going to take it. Instead of saying, that is good volatility and momentum in my favor and a strong confirmation in a flip of order flow, right? And that should build you more confidence for the trade. But everyone online just wants their trades to look fucking pretty. And if you want to be a good trader, your trades aren't always going to look pretty. They just need to have the foundation that, you know, you want to see, and then you build from there. Use PA from Tuesday to explain this. Okay, I'll go over Tuesday in a second. Can you check your DMs? Just sent a message like 2 weeks ago. Sure. Yeah, I'll check them after. I don't like actively check DMs like that, to be honest. I tell people to ask me all the questions in live calls, unless it's like something very personal. Then, you know, either someone will tell me, hey Patty, this guy needs your help or some shit. But I emphasize that you guys ask all your questions in live calls. That's why I do them. Anyways, let's go back to this, right? So what started off as a long idea, we don't get an entry, then we hit this unfilled 5 minute bearish gap, and then we get a high time frame to the downside. And so normally people would call fading this trade and seeing it play out as them missing out on the setup, but that's not how it works. Because if you didn't feel conviction for this, if you didn't feel confident for this, then it doesn't matter. You're not letting it play out without, you're not watching, you're not missing out. You're simply preparing for something you're more confident in. And so then there's that resweep. And so what wanted to be a long at first then turns into a short, but then you fade the short, and now this goes back to the long, and now this is your ideal scenario, right? And the targets now become, okay, this highest time frame inverse, targeting the 5 minute intermediate high, whatever, blah, blah, blah. And that's pretty much how the whole game of trading works. If you're still holding these same key levels for the long, then there's no reason you should be fading it. Yeah, it would have been nice to have the 5 minute unfilled, but you know, since the 5 minute got tapped and then it did something, it sent price lower to a resweep. That high that was once protected is no longer protected because we're getting confirmation that price wants to go back up. So anyways, this all started really with me just talking about not trading inside a 50 minute gap, but I'm gonna go into some other stuff now and save the questions for later once I'm gone through all this. It depends, I guess. Like, bro, if we're just, I mean, you're saying what if we just keep resweeping and whatever? Like, it's always going to be generating structure. I think the most important thing is, like, are we still getting good displacement? Because if I see like price doing this, like constantly resweeping inside the higher time frame gap, but it's like low volatility and we're just kind of chopping, that's different. You know what I mean? But if we are setting up like a good trade each time, you know, I'll try it. I mean, I don't see why I wouldn't try it unless I tried it like twice and it failed. And I'm at this point, I'm like, okay, 2 times is it's a bit much. You know what I mean? I'm not going to go for like a 3rd time on it. But yeah, and it's possible that actually does happen sometimes, very rarely, but you know, you shouldn't worry about it too much. So now let's go back to this, right? So rules with discretion, right? We start off with, if you're taking a trade inside a 5 or 15 minute gap, right? So if you're like entering off an inverse, but that price just price trades into that 5 minute, 15 minute gap that you were looking to target, and you still enter, that's not discretion. What else, I guess, can't be classified as discretion? I think that's for sure the most important rule. Oh, a big thing I don't think is discretion at all is this is a, you guys, some people make me laugh, bro. Tightening your stop loss is not fucking discretion. I don't know who told some of you that because you felt more confident, that gave you the idea to tighten your stop loss more. There is never an excuse, and I mean genuinely never, for why your stop loss should not be at the body or the wick of the manipulation leg. And I'm so fucking like firm on that. Why would you not want to utilize a whole leg? Why would you not want to give yourself as much room for the trade to play out, right? And you guys are gonna say, oh, but what if the trade is too big? It was too many points. Drop your fucking contract size. That's why you have the ability to change your contract size. I never want to hear anyone say that they tighten their stop loss because they didn't want to risk too much. That's not like, that doesn't even make sense. That doesn't even make sense, right? There's going to be days where the market presents more volatility. And what normally would be a 20, 40 point stop is going to be a 60, 70, 80 point stop, which seems like a lot, but everything is relative, right? There's days in the market where it's genuinely that volatile, where you're getting 100-point moves like nothing. So, you know, a 60-point stop loss, although it would seem like a lot normally, it would be regular stop loss that day. And so you always have to adapt to market conditions. That's incredibly, incredibly crucial. So I never want to see you guys tightening your stop loss for any reason. Is a fair value gap high, low at the key level valid for stop loss? No, listen, the stop loss thing is only one rule, right? It's as simple as, if you're taking longs here, you want to have it down here, right? It's always going to be like that, and vice versa. If you're taking shorts, you know, opposite. But let me try to go over a day, for example. Someone said Tuesday. I'm not sure why they said specifically Tuesday, but I'll look at Tuesday, just because that's what I saw someone say. What the fuck? Why did it switch the assets? Oh, because this doesn't have Tuesday? Oh, okay, I see. Oh no, here's Tuesday. Wait, I went Tuesday too far back. This Tuesday. Bro, what is this? How the fuck is it doing that? Alright, whoa, Tuesday looks fucking awful, dude. But let me see what you're trying to say here. Okay, sorry. Well, it doesn't look too bad now that we're here. So let's see. What is it exactly that you want me to look over with Tuesday, right? All I see here is price is trading up. Do we have any S&Ts? Meh, nothing relevant. 4 hour, 1 hour. Oh, okay. ES hit that unfilled 4 hour above. That's something to be aware of. And then, what are we asking about here? Whoever asked about Tuesday, is there a certain question you have about Tuesday? We traded into a 4 hour, and then we had a mech model. Let me play out this session. Bro, the only good thing I see about Tuesday is this long right here, right? Price trades into that unfilled hourly. We bounce off it. We had a resweep right here. Price hits the hourly, then we resweep it. I mean, there's a nice 30-second there. Trade into the 4-hour. I don't know. Price sweeps is high. Yes, it's trading at the 4-hour. Resweep, potential short from here. I'm confused. I can go over these later. Let me stay in flow state really quick, and then I'll go over these later. That's why I said I was gonna do questions later. I don't want to get like distracted right now. Well, I'll read the ones that are right now, but guys, just save the questions for later. Can you check the, I would say that you don't care if you have a 2-to-1 RR on a trade if you see everything. No, I will never take negative RR. If anything, I'll go break even and hold to at least a 1-to-1. What is the maximum of times? Already went over that. Should I trade this upcoming week or take a break and study and review? It's completely up to you. I haven't even traded all of fucking December, to be honest. Not on my live account, at least. And is that unintentional? No, I would have traded almost every day if I had my fucking live, which I do now, but at this point I might as well wait for January 1st. What is the update on your YouTube recaps? Should be starting to go up relatively soon. Still need to wait a few more days. The only time I trail my stop loss, we get a sub within a setup. Say we get an entry, but then ES takes your stop loss for an SMT, and then we get another inverse, so another entry. I would move my stop loss to the new swing. Yeah, that makes sense. I mean, that's at least that's like, you know, actual reasoning behind it. But yeah, all right, let's go back to this. So, like I was saying, the first thing we covered was not trading inside 5 minutes, tightening stop loss, whatever. So now let me go back to how you get to the point where you eventually become discretion, because people confuse discretion with overconfidence a shit ton. And everyone who says, oh, I want to be discretionary, I want to trade discretionary, it's not something that you can force, right? Discretion doesn't happen just like out of your own will. Like, I want to be discretion. I want to be discretionary. For example, I always tell people, when Patty's discretion kicks in, when my discretion most kicks in, is when I see some shit like this. Let's say, and I'm actually going to try to use a real example here. Let's do that, bro. It's still on Tuesday. Damn, this fucking data has very little shit. But here, let me draw it off first. So for example, with me, there's certain setups or certain market conditions that give me full conviction in a trade. And I know you guys have probably heard me say this before, to be honest, a few times, where I'm like, oh, the higher time from intermediate sweeps, right? So let's say we're going into the day and price sweeps out a low inside a 1 hour or a 4-hour gap, right? This higher time from intermediate low. When I see a sweep like this of a key level of liquidity of higher time frame swing inside a key level, like a 1 hour, 4-hour gap, I am usually expecting the best setup on the fucking planet. So then if I zoom into the lower time frame and I see, you know, this is what the lower time frame looks like, and we're setting something up like this after hitting the gap, right? It's like we had hit the gap, whatever, blah, blah, blah. This is a lower time frame. This is a higher time frame. We had swept out that intermediate low, and I see that there's just clear swing lows above, clear swing highs above. We swept out this higher time frame intermediate low, and we just start getting good displacement up here. This, for example, is one of those scenarios where my discretion kicks in, because I have seen this setup maybe 1,000 times at this point, and it's what I feel most confident in. So whenever I see a higher time from intermediate low or intermediate high gets swept, and then an inverse setup presenting out of it, and we're getting strong displacement, I will most likely not take the highest time from inverse, because I know that this is such a common theme and such a I guess like strong sign of a potential reversal here. Taking a counter trend trade here would make a shit ton of sense and will very likely play out. And so this is something that I look for every single day. And we can also I can also show you examples of the 930 Judas setups, right? Because those are super common as well, that I feel just very inclined to take. Bro, can this shit get the fuck out of my face? What the fuck is that? How does it keep pulling that up? Okay, so this day there's not, that was Friday. Let me go to, so something like this. This has happened almost every day of the week. I mean, not every day of the week, but this has happened at least 2 to 3 times each week throughout December. And it is like the most free setup ever, right? So if I see something like this where, and by the way, this is also can be considered a bit discretion, where you're anticipating that a level will end up holding. So if I see something like this where I'm like, okay, we're trading, you know, the previous candle held this hourly. This one is like kind of in the process of, this one's in the process of displacing through it. We have an unfilled 1 hour gap above, unfilled 4 hour, yeah, whatever. Right? So I look at something like this and I'm thinking, okay, like shorting here, if the drawn liquidity is right, we're gonna end up holding this gap. And if I wanted to, and if price were to go higher, would it really go higher after this 930 Judas when we have all this liquidity below? Well, in order for price to be bullish, we need to correct these imbalances before going higher, right? Because even bullish price action is going to have pullbacks in order to keep delivering higher. And we're pretty much due for one of those right now. So if I see like going into the morning, this immediate 930 Judas higher, the 930 swing low doesn't take any liquidity below. We leave this LR right here. We leave unfilled 15-minute right here. And I'm thinking to myself, okay, well, if this is right, then price will trade down to this unfilled 15-minute, and then that hourly bearish gap will end up holding, and we're getting this immediate displacement after this 930 Judas higher, and then we're going back down. And then so something like this is like, the rule I guess that I'm breaking here is something that's not necessarily a fact, but something that I can be a bit loose with, because it's the fact that we're currently above this 1 hour bearish gap, but if I'm right about this trade, we'll end up holding it, right? So someone would be like, why did you take that if the 1 hour gap, if you weren't inside of the 1 hour gap? And I would respond with, well, you know, everything else was there and ES was inside the 1 hour gap. And if we were to pull back into this 15-minute, then the 1 hour gap would be holding. And so someone would be like, well, like that doesn't even like make sense. But to me, it makes sense because I know that this 930 play plays out so many times, and we have this unfilled 15-minute below too, that it's such a high chance that price will want to go here first before going higher. And so it's not even like a question of, is my bias right about being bullish or bearish? I'm saying here the lower time frame and everything is so in line, and everything just makes so much sense for this pullback that there's no reason I wouldn't want to try it. And so that's a type of shit that you end up just like feeling super confident in because you've seen it so many times. And I'm sure I can find one of these setups like many more times throughout the week. But if you guys ever notice those, and I want you guys to backtest this too after, if like you go backtest 2025 and look at like 930 setups, it's almost always like the highest probability setup pretty much. Like it just like immediately delivers. No, that day was super weird. What else? Oh my God, bro. I fucking want to break this computer. What is it? I mean, not computer. Trading view just sucks. But whatever. And so here's where I want you guys to really listen, right? Because, and we can build it off of like, let's say basic mech model. Where we go. Okay, so this is like the basic mech model pretty much, right? We hit higher time from key level. We have good structure. Highest time from inverse to the upside. You know, break even slash TP at internal high here, which is unfilled 5-minute. Trade looks like this. This is the mech model in its simplest state. And so discretion starts with mastering mechanical, right? And I don't mean mechanical model, I mean being mechanical. You can't, like I said before, you can't force discretion. And so after you take a trade like this, which is very mechanical, implied in the name, once you've traded this over 100 times, 100, 200 times, you will start to notice things in the markets that you didn't notice before. You will start to feel more confident in certain setups that you might have not liked before or something. But it all starts with you forcing yourself to follow a set of rules as many times as possible until you've mastered the foundations of the model. And then you can make slight alterations. So an example would be like, let's say we didn't get an inverse here, right? But I'm feeling super confident in wanting to take longs. And I know because mech model says, we should go back to this 5-minute. This is just like a very free trade. And we don't get an inverse here. If price were to, this is like a common setup I see myself being discretionary with. If price were to like resweep this low, for example, and then let's say that you guys are gonna be like, probably like, what the fuck? Let's say we resweep this low, right? We never ended up inversing this candle or something. And now we're waiting to see if we get an inverse from this new leg, but price just displaces through this leg and it closes above here. I would still take this trade. And I'd be like, oh, well, we displaced through this leg. We're closing above this high. We have strong displacement. We're let's say inversing this gap from before. Oh, we're just getting a CISD here. So I'm taking this trade because we still have the unfilled 5-minute above. And someone would be like, what the fuck? That's not even mech model. That's not whatever. I'm like, you're not understanding that at the end of the day, this to me is so much confirmation. This is factually telling me that after this resweep, we're displacing so strongly above. We still have this unfilled 5-minute above. Yes, we are taking out the internal high in this case, but that's not my target, right? And that's the biggest, I think that's really the biggest thing that you need to understand, that if that wasn't your target and it got taken and like a level got taken, but it wasn't your target, it wasn't where your TP was going to be, and you still have everything there, you can still take the trade. But take that with a grain of salt, because that doesn't mean just take anything. What I'm saying is that's practically what it means to be discretionary. When you have everything else there, but you're changing something slightly systematic, slightly mechanical, and making it a bit, I guess, more adaptive to what the market is telling you. So in this case, I'm still bouncing off a higher time from key level, 1 hour, 4 hour rally gap. I still have an unfilled 5-minute above. I got this beautiful resweep. I have good structure. I have got good volatility, but I didn't get that original perfect clean inverse close. In this case, I got like a resweep and then price is spliced up, and then we closed above that high. And normally, you'd think, oh, well, if we take out the internal high, I can't take that trade anymore. And that's what someone who like has built the mindset of pattern trading would think. But rather than seeing it as, oh, we took this internal high already, I can't take the trade anymore, I see it as, oh, we're displacing really strongly through this leg and now closing above this leg, giving us a CISD potential inverse here from the previous leg, and we still have this unfilled 5-minute above, right? And so I know that's not something like where like you hear me say that and you're like, what the fuck? Like, how am I supposed to just know that? Well, I'm not telling you to just like memorize this setup specifically. I'm telling you to understand the thought process behind it, where I don't just I don't just convince myself now that a good trade has become a bad trade because of one thing when everything else is still there, right? A lot of the times where I see this too is when we have, this is the most common one, or let's say we are looking to take longs, almost like PDI longs pretty much, right? Bouncing off like a 5-minute here. And ideally, you know, we'd want to get this inverse right here. And we're looking to target this high because what does PDI teach you? That you want to target the accumulation zone high or low. And I will see someone fade the model if it like takes out the first high in a batch of LR. If this final high hasn't been taken, then don't worry about this random high getting taken, because you need to ask yourself, would you expect price to reverse off of this high? Or would you anticipate more so that it wants to take this high before anything? And so what I notice a lot is that people will fade a trade, right? Because they didn't get the close they wanted, and it's not as high RR as they originally intended it to be. But those aren't things that it's up to you to decide, right? That is not your choice. The market will do whatever the fuck it wants. If it wants to displace 20 points past the inverse, it will do it. But you need to grab the facts. And the fact is, it's displacing and it's inversing, meaning everything is still valid. Do I care about this? No, this is all noise. Yeah, it took out this high. But the fact is, has it taken out my target? No, it hasn't taken out my target because I'm looking to target this high. So I shouldn't be discouraged from this trade because of displacement, because of this high getting taken here, when it's not my actual objective, right? So I'm always asking myself these questions. Would I expect price to reverse from here? So anytime I didn't get the entry I originally wanted, but price is still giving me a slightly more discretionary entry, these are the two questions I ask myself that will confirm if I still want to take the trade, if I'm still willing to take the trade. Would I expect price to reverse from here? Would I expect price to reverse from this high? No. Is my target still intact? Yes, my target is still intact. So no matter, and last one. So no matter what anyone tells me, if I can answer all these questions in the sense of like, would I expect price to reverse from here? No. Is my target still intact? Yes. Are we still bouncing off my key level? Yes. If I can answer all those questions in the way that I just did, then nobody can convince me I am taking a bad trade. Whether I enter up here or down here, nobody can convince me it is a bad trade, right? Oh, Patty, but that close, like surely it was an A+ because of the close. No. That has nothing to do with whether it was A+ or not. And this leads me into the next topic. Patty, rate this trade. Patty, what would you rate this? Was this A or A-? Was this B? Dude, shut the fuck up. Did you like the trade? Yeah, I liked it. Did you follow your rules? Yeah. A+. I don't care anything else you just said. If you liked it, you follow your rules, it's A+, right? A+, whatever the fuck you want to call it. Don't even put a rating on it. You guys need to stop rating setups, because the problem with rating setups is it forces your brain to hyper analyze every aspect of it. And trading is not that complicated. You shouldn't overthink the setup. If you saw the setup and you said, wow, I want to take this, and you took it, you did everything you had to do. And now what happens is when you try to rate it, you will literally sit there and try to decipher the difference between A+ and A-. Do you see how fucking stupid that is? It's like the only difference between an A- and an A+ trade is probably just the aesthetics of it. If the foundation is going to be the exact same between an A- and A+ trade, right? Like, stop rating your trades. Stop fucking trying to find exactly where it fits as if you're getting graded on a test. It's always going to be different. Market conditions will always be different. Setups will always look slightly different. You're never gonna have the same price action back to back. So just understand that if you're following your rules, if you like the trade, if everything is there, if the structure is good, it is a good trade. Don't rate it. It is a good trade. And that's all that matters. And what you will learn as you become more profitable and you spend more time trading is that your only objective is to take good trades that you like. And you will also learn that even in the times where you take a good trade, and for one, it fails and you followed all your rules, of course, you guys know this. A loss is part of a winning statistic. That's a no-brainer. We've gone over that a million times. It's inevitable that you will lose. But more importantly, there will be times where you take a trade, and this is the slightest time, this is the most rare time, you might have missed something technical. You might have not been checking ES, and there was an SMT at your target, and you got cooked. In that case, you could have saved yourself from a loss, but hey, it happens. And I don't know who you think back-tested the strategy, whether if it was Blake and I or a fucking robot, but I'm pretty sure you do know that it was Blake and I, and we are all humans at the end of the day. And in every single statistic on this planet, you know, that is calculated by humans, there is a small margin of human error involved. There will be times where you accidentally misread something, where you accidentally miss something. But if you still took the trade and you liked it, I promise you that is still part of the winning statistic, even if you accidentally miss something technical. So don't start thinking that you're an idiot or that you fucked up or that everything's fucked now and you need to chase back that loss because in this case you actually kind of fucked up. It still happens. I will have days still where I see a trade, I'm like, holy shit, this is fucking great. And I enter it, you know, maybe I even up my risk a little bit. And then I enter the trade and I'm like, holy shit, I'm inside a 5 and 15-minute gap. This trade was not it. This is not good. I'm fucked. I'm absolutely fucked. But my risk is on, so I'm gonna accept whatever happens now, to be honest. And you know, most of the time when I say, well, I'm just gonna accept whatever happens, it usually just ends up losing, naturally. But I don't get mad at myself for it because I'm not fucking perfect at the end of the day, right? And not all my trades are gonna be at my most refined and level-headed state where I'm analyzing everything perfectly. So it's important you guys are easy on yourself. There's gonna be times where you miss shit. There's gonna be times where you miss stuff, and that's okay. As long as you don't try to chase back that loss. But you know, more importantly, above all, is that losses are part of a winning statistic. And so anytime you like a trade, you liked it, you followed your rules, and it failed, stop asking, what did I do wrong? Stop asking, what do you rate this setup? Because I will tell you, did you like it? And you're gonna say yes. Did you follow your rules? Yes. And then I'm gonna respond with, then why the fuck are you asking me? Every single time, okay? I'm not expecting you to take the same trades as me. I'm not expecting you to take the same trades as Blake. I'm not expecting you to have the same thought process as me. Because the more you trade our model, the more discretion you're gonna build, the more subjective your style of trading is gonna be, right? You're gonna like certain things that I might not like. You're gonna lean more bullish or bearish on a day where I'm not leaning, you know, that way. And that's how the trading game goes, bro. The more you trade, the more it becomes personalized and the less you become so fucking mechanical. It's important to be mechanical, but it's also important to be reactionary and listen to the facts. And with the way that we trade, with the way Blake and I trade, we pay attention a lot to the facts that we are being presented, right? And it's really important that you guys understand that. Would you say don't rate your trade or rate what you learned from the trade? The most important thing that you should be journaling is, listen, like, yeah, for one, just make sure, like, if you ask yourself, like, was this a good trade? And you say, well, yeah, I liked it and I followed my rules. Don't worry about rating it. That's a good trade. You know, that's a good trade. Don't try to be like, oh, A plus A, whatever. Fuck that. Don't worry about that. What you need to journal for real is your psychology. Like, you need a journal, like, okay, how did I feel going into this trade? Am I getting better at controlling my emotions? Did I try to micromanage my position while I was in that trade? Did I move my stop loss early? Did I go break even too early? Did I target something that I shouldn't have? Those are the questions you kind of need to be asking yourself. But if ultimately you like everything, then, you know, it was good. The most important thing about trading is that you're not letting your emotions override your logic. That is undeniably the most important thing, right? So if you're in a trade and you do start micromanaging your position, you do start kind of playing with things, that's something to journal, where you have to write down, oh, I decided to change my TP. I moved to stop break even earlier than I should have. That's the type of shit that needs to be journaled, okay? Yeah, it's very important you rate your psychology each day. And you're going to notice that the more you rate your psychology, and that's probably the most important thing. You'll start finding patterns in when your psychology is best. Oh, well, I felt really confident going into the markets today because I actually woke up early. I had a good meal and I fucking cleared my mind. That's why I traded so well. And you're going to realize that's when you trade the best, right? And then you're going to have days where you're like, oh, my psychology was in the shitter. I was super greedy because I was fucking hungover from last night, or I woke up 2 minutes before market open and I was trading on my phone. I mean, I've been there. You know, I've been there pretty fucking often. And that's almost always when I get punished. And that's what I actually want to learn from. That's what I always want to learn from. It's like, what did I do in my actual life that I guess, you know, slowed me down today, that made me more emotional than usual, that made me less, I guess, reactive and you know, more, how do I explain it? Like, you're at the end of the day, how you're executing in the markets is going to come down to your mental state, like how level-headed you are on the day. And every single time, for example, with me, like, I know this because I know myself and I've journaled it a million times. Anytime I go out the night before and I try to trade the next day, I get fucked because my brain is foggy. Anytime I don't get sleep and wake up at least an hour before market open, I get fucked. Anytime I try to trade from bed on my phone because I'm too lazy to go up and get onto my computer, I get fucked. Why? Because that's just me. That's what I've learned about myself. When I'm trading in bed on my phone and I want to just fucking vibe up, and I think that, like, I'm capable of that because at the point that I'm at in life, I get punished. I miss something. I don't see fucking ES took out a certain level. I don't see the SMTs. I don't see that we're inversing the high time frame gap. I don't see the fucking whatever. And I take a shit trade, right? And those are the things that you really want to most analyze about yourself. But yeah, I mean, I think the biggest thing, guys, is like, you know, I guess I tried my hardest today to sort of visually describe discretion. And I did say, you know, it's something that can't really be taught. I tried my best here, but verbally, I do feel like I'm covering what I need to be covered. And it's just like the fact, like, stop trying to be like Blake and I. Stop. I don't try to be like Blake. Blake doesn't try to be like me. We both just created an amazing model, the MEC model and the PDI model. And what that taught us was mechanically the things that we love about the markets. It taught us the scenarios that we feel so confident in when we're trading. And from that, we expanded our knowledge. We built narratives around that. I turned, for example, the MEC model into the conditions theory, because I realized that once the MEC model did play out and we traded into the 5 and 15 minute gaps, that 5 and 15 minute determined the next draw on liquidity. And so we built these narratives around these models, around PDI, around MEC model, around the continuations, everything. But it all started with one idea. And that's the same way your journey to profitability is going to work. You are going to start off with a foundation, with an idea, with a concept, with a model, and you are going to single-handedly build off of that. Not in a way that I can teach you, because I don't know what you like to see in the markets. I don't know what makes you more confident in a setup. I don't know. There's people in here who only like to trade continuations. Am I going to judge them? No. There's certain people here who only trade MEC or only trade PDI. Am I going to shit on them? No. What matters is that they are being mechanical right now and they are mastering that model. And the mastery of a model is what builds discretion. But if you try to rush it, if you try to force it, if you try to become experimental and call it discretion, that's when you get stuck forever in the break-even stage and you don't become profitable. If you can't follow a system of rules for at least 3 months of just only trading mechanically, then you will never build discretion. Because if you try to force discretion, if you try to just get experimental with it, and you're like, oh, well, what if I just enter off this instead? While you don't really have the market knowledge, you are going to slow down your progress by months, maybe years. And yeah, dude, the market doesn't give a fuck about you. So trust me, if you're doing something, if you're going into a trade, let me put it this way. If you go into a trade and you try to be discretionary, but that discretion is giving you anxiety on how the trade's going to play out, you're like, oh shit, like, is this going to play out? Like, oh, I don't know. Then you're not being discretionary. You're just being a fucking idiot. Because even when I trade discretionary, I feel equally as confident in my trade as I would with a mechanical trade. So, yeah, I mean, it's like, watch my trade recaps, guys. Like, you hear my confidence in everything that I'm going into. And it's funny, you know, it's funny, especially when you watch the trade recaps where there's like losses in them, where you will hear me say like, dude, this is the greatest setup ever. If this fails, then I'm gay. And then it just like fails, and I'm like, ah, shit. Well, I mean, I liked it. You know, I liked it. And the point is, I liked it. I liked it. And that's what's going to make me always enjoy trading. Trading like myself, taking the setups that I like, and not comparing my narrative to someone else. Because we're all going to think differently. Every single one of us is going to think so differently. And the more you compare, the more you will get fucked, and the more you will destroy your psychology, right? You know, I love when you guys like send me a trade that I didn't take, or you know, Blake didn't take, and you're like, hey Patty, you know, I know you didn't take this, but I really liked it and it played out. And I'm like, fuck yeah, that's what's up. That's what's up. You don't want to be like me and Blake. We're idiots. No, I'm kidding. But seriously, like, I love when you guys learn to build your own confidence and do your own thing. And that's why we got rid of the live trading. That's why we got rid of all these things that, like, honestly slow down your progress. Like, some people swear that we do this, like, out of, like, trying to fuck you guys over, like getting rid of stuff like that. Dude, I never once watched anyone fucking trade in front of me and took signals. Neither did fucking Blake. The few times I did, I realized how bad it was for me. And like everything we do in this program, it's with the intention of making you self-sufficient and making you like a better trader. We want you guys to be completely independent. Build your own thought process. Build your own narratives. Nah, fuck the live trading. It also just fucks up my own conviction, bro. Knowing that I have other people looking at me and that they want to copy me. Now my own thought process is being like watched and being judged by other people, maybe. You know what I mean? And I don't like that. I don't like that. Like, I understand, you know, it's easy for you guys to like refer to the times where we did have the live trading and be like, yeah, but you guys still won 80% of the time. And it's like, yeah, you know what, you're right, but I didn't really enjoy trading that much when I was live trading. I couldn't practice the skill that like brings me peace. It's like my therapy, right? In the morning, I like to just trade, not have to think out loud, just go on my phone, check some messages, eat some food, play my guitar, and not even think. I will just stare at the screen like this until a certain scenario presents itself, right? I will just sit here, not touch anything until the 1 hour gap that I have marked out gets hit. And that's exactly how you should be, right? Like, create those scenarios in your head, and then see if they start playing out, and then execute. Yeah, rating what you learn from it is really good too. If I don't overanalyze a trade, how do I figure out why I lost a trade? Well, exactly. Like, that was funny. You're not supposed to figure out why you lost the trade. Like, I don't know how to explain it. It's like, if there is a technical reason, it should be a pretty obvious one, because there's only a few reasons why you could lose. If everything else was there. Did you not take the highest time from inverse? Were you trading inside a 5 or 15 minute? And that's it. But like, how do I explain this? There will always be a reason for why you lost. You know what I mean? Every single time. You can find a reason for anything in the markets if you look hard enough. And like, literally, you can find a reason for anything. Even if it's the most bullish price action ever, and you're taking a fucking long, which you think is amazing because we're so bullish and whatever, I can sit here and be like, let's grab something, for example. I can sit here after this long, right? Let's say I took this long right here. And despite me loving it, all right, 5-minute pullback, beautiful PDI to the upside, pretty obvious it's a good fucking trade. And I can sit here and give myself 100 reasons why this failed. And that's not going to help me at all. That's not going to help me. And why is it not going to help me? Because if I were to take this trade 9 more fucking times, it would play out 7 out of those times, right? So why should I sit here and try to convince myself that it was a shit trade and that it lost because of this and this and this, when it's over? Like, if it loses, it loses. I don't give a fuck. I was bouncing off a 5-minute. Price was bullish. LR above. I fucking like it. I like it. I don't give a fuck. You know, I can sit here and be like, oh, well, maybe I wanted to rebalance EQ a bit more. Oh, well, maybe we were too premiumed. Maybe we wanted to hold this 1 hour gap, but I really liked seeing this high. I thought we were going to trade back to this high, but we're still holding this 1 hour gap and whatever. But we inverse this 4 hour, but we're still holding this 1 hour gap. So that's probably why I lost, even though we inverse a 4 hour and we had this nice high above. It's like, wow, like, you know what I mean? Oh my God, bro. Like, no, it's going to lose because it's going to fucking lose. If I had a 100% win rate, I would probably be completely AWOL and not have any social media presence and live in a fucking mega mansion in Mexico and have a bunch of parties and fun stuff happening all the time. And infinite cars, F50 for sure, and an Enzo and a Carrera GT. And I wouldn't be talking to any of you guys. But I don't have a 100% win rate, right? So I need to spend my days getting my shit together. I need to make sure I'm not destroying my mental health too much on the weekends, that everything I do is in moderation, that I'm still waking up early, that I'm doing everything that I have to do. And that's just part of life, right? You're not going to win 100% of the time, and that's with anything. And that's what trading teaches you, bro. Trading wakes you up to the reality that it's like everything else in life. You can't fucking win every time. You can't have everything that you want. But if you have enough of a reason to try, then just try. Then it's worth it. You know what I mean? And that goes beyond just trading, bro. That goes beyond just trading. If you can sit there and just tell yourself, this is worth trying, then just take the fucking setup. I hate to ask this, but could you draw out the 930 Judas example you explained? That still confuses me a bit. Yeah, I mean, it's as simple as like a lot of the times, bro, when market opens, let's say we're like kind of chopping around, right? And the 930 Judas is usually a great setup because I'll tell you why. It usually looks something like this. It almost always presents a setup because we can look at it many different ways, right? We can see like, okay, we have this buy side above and we have like an unfilled 5-minute below here. And so usually when market opens, it's going to manipulate in a certain side right at 930. And so let's say 930 is about to open up, market's about to open up. I don't care which way it manipulates, right? But I look to see for which way it manipulates. And so let's say 930 opens up and bang, strong candle. This is a 930 candle, opens up, takes out that buy side. Cool. Now I look to see if price starts inversing immediately after that manipulation candle. And if I start seeing strong displacement in this case, then I'll just take usually an inverse in that corresponding direction. As long as, you know, the facts are there and things look good, then this is a pretty free setup most of the time. And what I was saying with this is that sometimes with these 930 setups, you'll have like a 5-minute gap that you have to inverse of the leg for some reason, or like a 3 or 4 minute. But 1 minute is giving you already such strong confirmation, and we're already running through the whole leg. And I say it's one of those scenarios where you don't really have to wait for the highest time from inverse. What you want to look for more so is a displacement. Like, are we getting good displacement now back in this direction, right? If this is a 930 candle, are we displacing now to the downside after the manipulation to the upside? And if we have good displacement and we're getting an inverse, it usually plays out. But don't take that with a grain of salt. I mean, take that with a grain of salt, and don't just pattern trade this idea. Right? You still build the narratives that you would normally. I just can't figure out what's causing me to lose trade after trade, and it's tearing me up after 2 years. Well, you got to back test, become better at your technicals, get your win rate to about, 60, 70%, and then start trading the live markets. And if you're losing in the live markets but you have good back testing, then it's your psychology. It's completely your psychology. I love to hear that, Chemicals. How did you begin to decrease your fear of losing and taking trades? Well, why would I be scared to lose? I know it's bound to happen. But no, seriously, I mean, I guess if I were to answer that very truthfully from your perspective, I mean, eventually you're just, the more you trade, the more you become, it's not numb. You don't become numb. I don't like when people use the word numb and like you become emotionless. You don't become emotionless. You just start to realize more that it is a game of probability. And if you try to question probability, then you're just frying your fucking brain for no reason. Like, the point is, you're not going to win them all. And it's just acceptance. It's acceptance that nothing is perfect, that there's no such thing as a 100% win rate, that, a green day or a red day doesn't determine whether I'm a good or bad trader. It's my ability to follow rules. Yeah, I guess your first step, AB, would be to just get better at backtesting, honestly. It's the best way to get reps in. I would spend more time backtesting, spend more time journaling, rewatch videos. Do what you have to fucking do to get better. Yeah, I explained the 930 Judas thing. I'll post a recording. There wasn't a moment that I knew that it clicks. People ask that all the time. I didn't just wake up one day and I was like, yeah, it makes sense. Although I did have moments like that where I woke up and I was like, holy fuck, I got it all figured out. And then I lose a trade. There was many times throughout my journey of profitability where I thought I low-key figured everything out and then I got fucked. But that's part of it. But no, it wasn't a certain thing that clicked. It was just the mindsets, bro. It was like, I just said it, 10 minutes ago. It was realizing it was like anything else in life. It's all it was, right? It's all it was. And that's it, dude. And like, I feel like everyone just tries to take shortcuts with trading because that's the stigma around it, that trading is this get rich quick scheme and you're supposed to go from 0 to millionaire super fast. And that's just not how it works at all. It's a slow thing that can turn into a fast thing. But it's like, I always say this, right? You spend 1,000 hours making $0 to eventually get to the point where you can make $1,000 in 1 hour. Like, that's what trading is for. And it's not going to happen, your first week, your first month. It's going to take a year to start getting to that point. Yeah, you can start making money 2 months in, 3 months in, 4 months in if you're someone who's disciplined. But you need to be in love with building, with becoming better. Trading is just like, you don't become a better trader just trading, and everyone thinks that. People who their life outside of the charts sucks, they don't take care of themselves, they don't go to the gym, they have no discipline, they don't do shit, and they just trade every day and think that that's what makes them better, that's not how it works. It's never worked like that. Like, you actually have to get everything else in your life in order to be a good trader. It's the only way. It's the only way. And, you know, some people don't have the discipline to do that, to get their life in check. So they can't become good traders. I believe IFG more dependent on drawn liquidity, so depending what your target, that's how you can take what looks good to you for real, what you think. Yeah, I think it's very heavily dependent on drawn liquidity, but drawn liquidity still needs support from higher time frame. That one thing that helped me psychology the most in trading was having a fucking life and not staring at the charts. 100%. I completely agree. Yeah, just rewatch the recording, Hanson. I've been seeing huge improvements recently. My psych has gotten so much better. I'm only taking setups I really like, and I'm okay with not taking trades for days in a row. And I've been super happy with it because I'm seeing psych improvements, and I feel that's one of the most important things. Yeah, 100%. Doing it perfectly. I thought I had that 7 months ago. Well, yeah. I'll check DMs after. I've been performing well in live markets lately, but still stuck at backtesting 55% win rate. I feel so different backtesting for me. Have you ever had this feeling? Yeah, some people are like that. It's just hard for them to take backtesting seriously. But, you know, you got to force yourself to take it seriously. I would try Alpha Futures, Quasi. Or Tradeify. Do you think SMTs are a crucial part of trading? I have 85% win rate backtesting without SMTs with IFVGs, and I feel like I'm not ready yet for a funder because I don't understand SMT because I feel like I need more information and understanding of the market. So I'm stuck in analysis paralysis and backtesting. Dude, the only thing you got to know about SMT, it's literally just one thing, pretty much. If I'm in this trade, on NQ, and ES hits my target before NQ, I'm closing my position. It's as simple as that. Another thing you need to know, if I'm looking for NQ to hit this unfilled 5-minute down here so I can take a long, and ES hits it, but NQ doesn't, I can still take this long because now there's an SMT there, right? ES is down here, NQ isn't. That technically means NQ hit that 5-minute, and I can take this long, all right? So it's things like that. It's like if I want to see something, if I want to see price bounce off something and ES trades into it before NQ, then I can just consider that NQ did it too. If I'm looking to target something and ES takes it before NQ, you know, then I have to close my position early. Why don't you use your other camera? Right now I only have this webcam. Well, I mean, I have other webcams too, but like, I don't want to plug in more than one. I don't really care. I'm not gonna lie, maybe one of my problems with trading is not being happy with my life outside of the charts. It's not a maybe. I promise you that's what it is. Like, bro, I'm gonna just keep it a buck with you. Like, I got out of a 3-year relationship. I took a year off of school. I quit my job, and I moved into an apartment alone. Just because I wanted to become better at trading. Like, you gotta do shit to focus on yourself and become better. I'm not saying you have to do those things, but if you're not happy with shit in life, if things are weighing you down, you need to make change. How did you do it in college? I'm in college currently, and sometimes I fucked up my schedule and have free time and stuff. I do gym, run. I don't want to burn my eyes on the charts. That free time sometimes feels like I should be doing more. I don't know how to explain it, just like tips or something. Yeah, 100%. Wait, you're saying you don't have time? I'm in college currently and sometimes I fucked up my schedule and have free time and stuff. I do gym run and I don't want to burn my eyes in charts at free time. I feel like I should do more. I don't expand it. No, not necessarily. I think as long as you're being productive, taking care of your health, that's super crucial. But yeah, if you want to spend some time, back testing or some other shit, if you feel like you're not doing enough for trading, for sure, spend a bit more time back testing, rewatching videos. Dude, 30 minutes of any sort of practice you can get is going to improve so much. But yeah, no, I did trade during college for 2 years pretty much. And it was hard, bro. I will say it was hard. I was trading during classes sometimes. Then I changed my schedule to not overlap with New York session. Sometimes I couldn't even trade New York session, so I would trade London session. Fuck, bro. I mean, I did the whole, yes, I tried everything. It wasn't easy. You're good, Carlos. Yeah, he did. He did big prez. Yeah, we're seeing what we can do. How did you pay for your rent while you didn't have a job and were still unprofitable? Well, when I was paying for my rent, I did have a job. So, but first semester of college, I went to study in Rome. And yeah, I mean, my grandma was fucking covering that, so shout out Granny. No way. Bro, Rome is my fucking favorite place on the planet. Well, I mean, I just had a great time, so. I'm still 21, living with my parents. I'm insecure with myself and exhausted. I definitely need to make some changes. Hey, bro. Don't be fucking insecure. There's also nothing wrong with living with your parents. I would go to live with my parents right now, and I'd have no shame in it. The fuck. I love my mom. I love my dad. I love all of them. But yeah, bro. Look, the point is, you're making an effort. You have 2 jobs, and you want to make changes. You're in this fucking mentorship. You're trying to improve your life. Don't beat yourself down, bro. You're on the right track. Seriously. That's all that matters, dude. Yeah, that looks like a very good setup. Looks like a very good setup. Little 11A reversal. That stop loss is concerning, though. Yeah, bro. London session trading would destroy my mental health. I thought it was like fun and shit for like 2 weeks because I had a homie who was living with me and I was teaching him how to trade. And we would both set an alarm at 2 a.m. and we'd wake up and fucking trade. And, bruh, like it was funny and fun for like 3 weeks and I was low-key cooking. But then like the nights where I would like lose a trade at like 2, 3 a.m. and I couldn't fall back asleep just would like ruin my week. Hell yeah, AB. You got this, bro. Step by step, dog. I don't really like focusing on psychology because it helps me be actually disciplined. With psych, instead of worrying about forcing a trade, breaking rules, I just don't break them and not go into mental loops. Wait, what? I don't really like focusing on psychology because it helps me be actually disciplined with my psych. Instead of worrying about forcing a trade, breaking rules, I just don't break them. Well, I mean, that just sounds like you have your psychology in check, to be honest. It sounds like you know what you're doing. Yeah, I mean the thing is it's different for you because London session isn't at 2, 4 a.m. London session for you is at 8 a.m. So it's not that bad. You can trade London. But yeah, it's definitely New York session is the best time to trade. And there's no reason that you can't. Oh, you said you're at work. Well, I mean, hopefully you get to the point where you can just trade, bro. Because you can still trade in New York at 3 p.m. in Italy. Yeah, taxes, bro. Just gotta fucking, once you start getting like at least, you know, 5 to 10K in payouts, hire an accountant and he'll save you more money. You know, a lot of people are scared to make investments that overall save them money and make them money. Like an accountant will literally save you so much money in taxes. Like, you know, and all you have to do is pay the dude like $800, $1,000, some shit. I mean, if you have a small book, then it shouldn't be too much. But yeah, and they'll help you write off shit. There you go, big prez. Bet. All right, boys. Well, I'm gonna start getting ready. I have to head out soon. I still feel like there's some things I want to cover. I want to go into more technical things, but I'm gonna do it more prepared, I guess, in the sense of technicals. I did get a good idea of what you guys is. Holy English. What you guys want to know more about with discretion. I'm gonna upload this right away. But yeah, I mean, I think I got a lot of it out of the way with discretion. Did you guys like this session? Did you learn a lot from this? Fire. My trading colors are very simple, bro. Bet, Avery. All right, fellas. I'm going to end the recording here. I'm going to post this, and then we'll catch up tomorrow. I'll see you guys tomorrow. Peace out, boys.